I don't know about a year. Timing is very uncertain. 13 trillion debt now trades with a negative interest rate. The amount is growing at 200 to 300 billion a month worldwide. The economies of the world and the financial system of the world are not prepared for the shock when that reverses. And the policymakers won't know what to do when that happens. And that's the biggest risk right now facing the whole financial system worldwide.
I think the biggest surprise will be what the condition is in China. Look, we're facing a very large growth in debt to GDP in China. But the surprise is going to be, is it a financial crisis? Or have they successfully managed a smooth transition? I'm not sure which it is. I know that they're reforming their economy to try and desperately avoid this. The surprise is going to be what the actual outcome is, because it's one of these two.
The extent to which we still have low interest rates across multiple economies will be the surprise. I think that that's going to be in place and it's going to be with us for a while again.
I think ultimately it's going to be how and if the UK does exit, because that will set the stage for whether others do. And the UK and the EU are such an important aspect of the world economy. So I think that's ultimately going to be the big shock, one way or another, how it plays out.
I think the biggest surprise might be that Japan's still easing. A lot of articles in the last week and month have been centered around the fact that BOJ is out of ammunition. What are we going to do now? Well, there's a lot of things that BOJ can do, and I think that we're just at the beginning of it. None of this is good for Japan long run, but one of the things that we were joking about the other night was when it gets down to it, the BOJ can buy sushi. There's no limit yet to what the BOJ can do, and I think that applies to central banks. It's a sad commentary on where we're at, but it means that there's still ammunition left to go.
China or Europe.
In what way?
They're both heading for serious reallocations and adjustments, and neither of them are doing a good job of that right now. So the issue, the primary issue, I don't think is the U.S. economy, is the international effects from either one or both of those onto us.
Good or bad? I think I don't know if I'd call it a surprise, but I think a bad one would be if oil went back up to about $70 or $80 a barrel because of some disruptions in the Middle East. Saudi Arabia, Iran, some, ISIS. So I don't think anyone's expecting that, so I'd call it a surprise. If you look in the futures markets for oil, you don't see any expectation of a big sustained increase. So I think that'd be a very negative surprise for the global economy. Positive surprise. I suppose positive surprise would be if U.S. and global productivity picked up, because that's been very disappointing. And ultimately our living standards are dependent upon productivity. There's so much capital, so much technology. If we suddenly saw a real improvement in worker, not just in the U.S. productivity, you could have much faster economic growth, generate much more overall income, and I think that'd be very positive from a federal deficit, and probably would mean faster wages because people's productivity and their wages should be tied together.
I think a possibility of a U.S. recession, perhaps to 12 to 24 months from now. I think that most people are not expecting that, and a large bear market in the U.S. stock market.
I suspect the biggest surprise will be that all of this monetary policy expansion we've done over the course of the last, 8 years doesn't quite have the intended effect. We don't know what effect it has, but not the intended one.
The biggest surprise for the world economy is going to be weakness in Europe and the question mark over China, hands down. I mean, those are the two big issues.
That Europe is on its way towards some kind of an exit to the EU, that Brexit was the beginning, not the end, or an anomaly.
That there will be a reaction function in the political world, and that there will be fiscal stimulus leading to higher interest rates and faster growth.